constitutes this Tiger Brands business. Strong brands, absolutely great brands, which allow you to retain that brand presence on shelf. So they tend to be, as you know, number one or number two in all of the categories. So the brands are strong. Our people and our processes, I think, are perhaps certainly on par with some of the best in the world, and we continue to invest and drive around those. So brand, people, processes. And then most importantly, we've had to make sure we're able to sit in front of our customers regularly in order to look for opportunities to drive volume, in order to find creative ways to drive volume. And indeed, it's not been easy. It's not as if it's come to us. We've got to go and fetch it.
If you're looking at the business, your claim to fame has been a brand. How loyal are customers, particularly when times are tough? And is there flexibility on your front to move towards a no-name brand status at all?
Okay. So how loyal are customers? Customers are particularly loyal. So if you look at any of the recent surveys, the Sunday Times surveys, etc., you'll see Coos, the number 2 brand in all-time brand, only behind Coca-Cola. I think that's an achievement, don't you? Tastic, the number 1 food brand, etc. So we've got strong brands in that regard. However, in these times, what we've had to do is also make sure we have what we've called relevant pack sizes. So we've had to look at what pack size is more affordable than not for the consumer. So relevant pack size manufacturing has been a core part of what we have done. In addition to that, in some instances, we've had to take a bit of a dip in the margin. You'll see in some of our businesses that our margins are not where they ought to have been, and that has been a conscious decision in order to continue to drive those volumes. So the brands are strong. We believe we've increased our investment in the brands this year, and we continue to see what we would call success in that area.
Let's take a look at the rand. I mean, you've mentioned that it's smacked your export division, but it has come with some benefit in that you do import to a large degree. So let's take a look at your view on the rand right now, the net impact it's had on your business, and what's your view on whether we should be seeing state intervention?
State intervention. I'm sure I'm dyslexic when it gets to that. But let me just talk very briefly about the rand. On the export side, it's quite obvious what that impact has been. So notwithstanding the fact that our volumes are up 10% in our deciduous fruit business, and although there have been some difficult pricing issues out there with Europe, North America, Asia, etc., our volumes have come up nicely. It's definitely a rand impact. Let's look on the import side. You're absolutely right. We do gain from that. However, what it's also changed is the competitive dynamic. So suddenly with a strong rand, be they the retailers or traders are able to go to a number of markets around the world, buy traded products, whether it's rice, whether it's baked beans or other, and bring them in either as no-name brand or confined label brands, etc. So the dynamic change is very difficult. So our competitor set changes as a consequence of that rand. It is important if you look at Northwestern Europe by way of example, and you look at the number of products that come out of the Eurozone that have come into these markets. Given the state of those economies, the state of the Euro, they've been able to bring those products into these markets. Some would call it dumping. You have to prove dumping. But certainly that we've seen the impact of those practices in terms of what our portfolio has suffered.
Well, let's take a look at your African expansion strategy, because it's strong on your agenda. Now, just how much of a challenge is it finding these opportunities to grow, though? Because some highlighting that you'd need to see a significant size deal happening in this territory for it to be a game changer for Tiger Brands.
Absolutely. So, 2 years ago, we continued to say we've got to find the right partners first and not just the right business. There are many instances where we've identified great assets, but for whatever reason between the owners of those businesses and ourselves, we've not come to terms. So we took the patient route. If we look at the Ethiopian example, the company that we own now 51% of, which is in food, personal care and home care, great opportunity. 85 million people, an economy that you will know is growing phenomenally and has for the last few years. So you begin to see an opportunity that can, certainly within a decade, deliver significantly for us. If you look, we bought a biscuit company in Nigeria, 100% thereof. Small, it's probably the number 5 or 6 player in that market, but growing at a wonderful rate and has great brand. Then you look at UAC, which is the JV that we are in the process of concluding. If you put all of those together with our existing businesses in the Cameroon and in Kenya, as well as our export businesses excluding deciduous fruit, you've got more than 1.5 billion rands worth of turnover, beginning to gain momentum.
Momentum to what extent? What's your target? What do you see those operations bringing to the bottom line, let's say in 5 years' time?
No less than 10% of our bottom line, certainly. In fact, I'm comfortable we'll exceed that.
Well, you're boasting a strong balance sheet, 2.6 billion in cash there. Many saying you can afford, obviously, to go down this route, but what's the status on the company's dividend policy? Because that's a question shareholders will have, when you're sitting on this cash with anticipation of these deals coming up.
And as I said this morning in the presentation, 2 times dividend cover is our policy. That's the first part. The second is there's some real assets that we're after out there. Can't guarantee that they'll be successful tomorrow or next week, but there's some real assets, and we believe we'll deploy this cash effectively and efficiently over the next few years. So, a year ago, I was told I had a prudent balance sheet. 18 months before that, I was told I had a lazy balance sheet. I'm not sure what I'll be told this time, but what I will say is that we are working efficiently and effectively to deliver long-term and sustainable value for shareholders.